Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market simply balanced within a range. The sellers were still active on the pushback into this broken support zone, which acted as resistance. And at this point, bigger picture, we know that this is the first real big pullback and almost a reversal of the entire breakout move, right? So the market is at an inflection point where either the buyers are going to step up again and push prices back up, or this can turn into now a failed breakout type scenario. So this morning, it's important to watch 17.5 to 20, the bull bear zone, and in the event that we break it, we can still get buyers active at this next zone, 13 quarter to 15 quarter, but that's really the last spot. You can see that's actually the low of the move over here. So that would really be the last spot for buyers where they could step in and reasonably push prices back higher. So in the event that we break here, short term, it would tell us that the market is weak and it is a bearish indication to even break the bull bear zone. But if we get to 13 quarter, 15 quarter, and then get a strong bounce and start trading back above 17.5 to 20, then we'd have to give edge to the buyers yet again. Now really, in order to get a decent upside move, it's not simply about holding 17.5 to 20, but the short-term inflection point is going to be this 22 to 23 area over here. The prior VPOC, gap fill, 23 quarter. If we can really start holding above 22, that's where we can actually see some pretty decent upside. And if we fail to get above 22 and just continue to bounce below it, then we could get a breakdown to 13 quarter to 15 quarter, and then perhaps get some buying over here, and from there we'll have to see, if the market can get back above 17.5 to 20, or whether it holds below it. Based on that, we can establish our bias. But right now we know that the market is at a important inflection point. We saw the market balance in a range in the overnight session on pretty high volume, and we know that there's going to be a decent move one way or the other, but until we really break this low and confirm that this whole breakout is now invalid, we still have to give edge to the buyers here. Again, we don't want to make the mistake of going overly bearish right when the market is about to turn around. And if we can hold above 22, then on the upside we can quite easily make a move back up to 30 quarter to 32 quarter, and potentially even previous day's high 34.75, and even fill the gap at 36.75. These kinds of setups where you have a long liquidation day within the context of an uptrend, a lot of times they can reverse 100% and more. So this morning on the econ calendar we have consumer sentiment at 8:55 a.m. Central. And we can still get some decent movement even ahead of that, especially if we actually push lower. Then it's pretty high odds that we're not going to break initial support ahead of econ. But once the econ's out of the way, and technically even ahead of it, we can still get a move higher out of this bull bear zone. And if we start holding above 22, and like I said, once we start holding above 22, that's really where the 100% reversal scenario would start coming into play. So this morning, we'll be keeping an eye on the internals to see how much weakness we're still seeing in the market. Keep in mind that the advanced decline line is based off the prior close, which was 23 quarter. So if we're trading bull bear zone, we should not be seeing any massive downside readings. By the time we get to initial support, if we get there, the readings could be somewhere around minus 1,000 to maybe even close to minus 1,1300 on the advanced decline line, and that's okay. We can still reject initial support. Also keep an eye on the NYSE tick to see where the momentum is. Are we holding above zero, below zero? The other thing to note is that yesterday's downside move happened on fairly balanced internals. We didn't really see any really broad market participation in the downside move. The advanced decline line, even in the close, was somewhere around, I think, minus 7,800, which is not really indicative of any panic market, right? So For all those reasons, I think that today there is still that potential of a bigger reversal that could play out. And I think once it starts playing out, because we're running on high volume and we're seeing some more volatility, we can still get rotational movement at the resistance zones, but overall you should see a trend to the upside where you're putting in higher highs and higher lows once you start holding above 22 to 23. So if that upside scenario is really going to play out, then it should be kind of a trending type move, not a trend day, but a trending type move where even when you're putting in some bigger swings, you're holding the prior low, right? You're not breaking them and chopping in a big range. So ideally, that's the way that that reversal should play out if we start holding above 22 to 23. So those are really the main ideas. So heading into the open, we'll keep an eye on yesterday's low at the bull bear zone, and understand that buyers can step in right here. But even if we get a break of this, initial support is really the last straw as far as the buyers are concerned. It's the low of the move, and a previous high volume node in the previous balance, the starting point of the big upside move. So there's a lot going on here at 13 quarter to 15 quarter, and if today we are still going to get a reversal, then that's really the final spot that could get tested. But ideally, we hold above the bull bear zone and then above 22 and start seeing some more upside. So those are the main ideas. Let's see how well the buyers can hold it up today, and we'll take it from there.